Hello friends, a very good day to all of you and hope you're all doing fine. Over the next few minutes, we'll discuss some of the key events of the recent past related to the Indian equity market and also present our views on the market outlook. The Indian equity market movement during the past month was positive. The Nifty 50 index went up by about 3.5%. Midcap index was up by 3.9% for the month, though the small cap index was only up by 1.5%. The sectors or themes which saw good gains during the month were financial services, consumption, closely followed by transportation sector. MSCI India was also up 3.6% for the month as we saw FII participation in select counters during the month. The market is showing no real signs of jitteriness due to the war-like situation between India and Pakistan post the innocent killing of civilians by the terrorists last month. FII flows for the month ended in a slight positive territory with net cash buying close to $0.3 billion. DII's flows moderated a bit but was still strong at positive $3.5 billion for the month. The GST collections for the month were a historic high at INR 2.37 trillion. An increased compliance and formalization of the economy is helping with ever-increasing tax collections. The PMI index for the month was also up month-on-month at 58.2 in April 2025. Corporate started reporting results for the quarter and fiscal year end. Almost half of the companies in the NSE 50 posted their numbers so far. The results were broadly in line with the street expectations, and we haven't seen any big changes to the earnings being made by the street so far. Same has been the case with midcaps and small caps, whose results have been published. There is an increasing comfort in maintaining profitability going ahead by the companies, though revenue growth seems to be a bit challenging for most of them. On the valuations front, large caps are now trading just about par with historical averages, while mid-cap and small cap are still trading at multiples higher than their long-term averages. Delivery of earnings becomes even more critical during this period, especially for mid-caps and small caps. We would look at buying high-quality companies available at reasonable valuations. On investing in equities now, we believe that one needs to follow the time-tested principles of regular investment and long-term focus. With expectations of continued volatility in short term, we advise equity investors to make disciplined and regular investments with long-term focus and utilize periods of volatility to build a long-term portfolio at better valuations. We advise investors to have a slight tilt towards large cap and look at mid-cap and small cap strategies only from an overall cycle perspective and have an investment horizon of at least 3 to 5 years. The key risks to watch out for are both global and domestic. On the global front, we would watch out for policy changes in the US, both fiscal and monetary, including tariff-related measures which could impact global growth dynamics. On the domestic front, we expect geopolitical situation to govern the course of future movement for the market. Thank you.
Mutual fund investments are subject to market risks. Read all scheme-related documents carefully.